All right, so I'm just going to run through the vehicles adjustments required on the 2014 service firms question. So you've got depreciation to be provided as follows: vehicles 20% of cost per annum from date of purchase to date of sale. That's kind of a prompt that you're going to have the sale of an asset, and you're told here that on the 1st of July 2013, a vehicle which cost 40 grand on the 1st of January 2010 was traded in against a new vehicle which cost 59,000. An allowance of 9,000 was given on the old vehicle. Okay. So this one is slightly different to other service firm questions where you've had the disposal of an asset because you traded in or sold a vehicle that cost 40,000. But if you look at the start of the question, you had vehicles costing 90. So obviously you've got a vehicle which cost 40 and maybe another one which cost 50 here, and you're only selling one of them. Whereas in other questions, I suppose you've sold the only vehicle you own in the question. So what I would say is when I'm doing the vehicle adjustments here, I'm looking at vehicles, it might be helpful to think of that 90,000 at the start. That 90,000 at the 1st of January 13 as being a 40,000 you dispose of on the 1st of July, and then maybe one vehicle costing 50 or a couple of vehicles costing 50 grand in total that you don't dispose of, so you still own at the 31st of the 12th. Okay, so when you dispose of a vehicle, you're going to need to calculate the profit or loss on the disposal of that vehicle. You'll also need to do a bit more work calculating this year's depreciation and maybe the accumulated depreciation that's going to go onto the balance sheet. So the first thing I'll do maybe is work out the profit or loss on disposal. And that's going to be basically the selling price of the vehicle take away how much it was worth when you sold it. Okay, so selling price take away the net book value. The selling price here is the allowance that you get for it. So you're not actually selling it for cash. You're getting a trade-in allowance of 9,000. So if it was worth more than 9,000 when you sold it, you made a loss. If it's worth less than 9, you made a profit. So we're going to need to figure out the net book value of that vehicle, which cost 40 grand on the 1st of January 2010. So the vehicle cost 40,000. You're going to take away depreciation for 2010, 2011, and 2012. They're full years. So take away 3 full years depreciation. And then you're told that you depreciate it until the date of sale. So that 40,000, you didn't sell it until the 1st of July. So you're also going to have 6 months depreciation in 2013. So take away another 6 months depreciation. Okay, so the 40 grand has been depreciated for 3 full years, and you were told that at the start of the question as well anyway. Okay, all fixed assets have 3 years accumulated depreciation at the start of the period, and then another 6 months for this period. Okay, so on vehicles, depreciation is 20%. So 40,000 by 20% is 8,000. So the 3 full years is going to be 24,000. And then if a full year's depreciation is 8,000, that's 6 months in 2013 is going to be another half of 8,000 is 4,000. So that's 28,000 accumulated depreciation. So cost less accumulated depreciation, 28,000, means 12,000 is the net book value of the vehicle on the 1st of July when you sold it. Okay, what did you get for it? You got a trade-in allowance of 9,000. So take away that 9,000 and that is 3,000. So it was worth 12. You got 9,000 for it. So you got less than it was worth. So that's €3,000 loss. Okay, and that's going to go into your income and expenditure account as an expense. Okay, so there's the loss on my disposal. So I needed to figure out the net book value of this vehicle that cost 40,000 and compare it to the trade-in allowance that I got. Okay, the other thing then I need to do is figure out the depreciation charge for this year in the account. So what I'm going to put in as depreciation for vehicles in the income and expenditure account. Okay, so this year's depreciation, it's going to be made up of, so if you remember, we had this 40 grand we disposed of on the 1st of July, but I did depreciate that by €4,000 this year. So it's going to be 2013 depreciation on disposed vehicle, plus I bought a new vehicle costing 59 grand on the 1st of July. So that needs to be depreciated from date of purchase. So I'm going to have 6 months depreciation on this €59,000 from the 1st of July. So plus 2013 depreciation on new vehicle, plus, remember I had a vehicle worth 50 grand at the start of the year that I still own at the end of the year. I haven't disposed of that. So it's going to be the 2013 depreciation on that 50 grand vehicle I owned at the start of the year. Okay, so this year's depreciation is going to be the 2013 depreciation on the disposed vehicle. I've already figured that out. That's €4,000 plus the 2013 depreciation on the new vehicle. So the new vehicle cost 59,000 and I depreciated at 20%. So that's going to be 59,000 by 20%. But I only depreciated from the date of purchase. Okay, so I purchased it on the 1st of July. So that's going to be 6 months interest. So you're going to do 6/12ths of that. And then you've got a vehicle you owned at the start of the year and you still own it at the end of the year. So you're going to have a full year's depreciation on that vehicle that cost 50 grand. So that's 4,000 plus, that's going to be 5,900 plus, that's going to be 10,000. So that is 19,900. Okay, and that's vehicle depreciation for 2013. So that is going in the income and expenditure account as an expense. All right. The last thing then I'm going to need to do with vehicles is what's going to go in as accumulated depreciation in the balance sheet. So that's going to be accumulated depreciation on the 50 grand vehicle. So that 50 grand, remember I had from the start of the year that I still own at the end of the year, plus the vehicle I purchased. Okay, so accumulated depreciation on that 59 grand, which is just going to be this year's appreciation because I only purchased it this year. Okay, so plus 2013 depreciation on new vehicle, which is 5,900. All right. I don't put in any depreciation on my balance sheet in respect of this 40 grand vehicle I disposed of. Okay, that vehicle is disposed of in the 1st of July. The cost of it will not go on my balance sheet. The accumulated depreciation on it will not go on my balance sheet. So the accumulated depreciation will be the 50 grand vehicle. So I had depreciated that for 3 years before the start of this period. Okay, so 50,000 by 20% is 10 grand. So at the start of this year, I had 30 grand depreciation sitting there. Plus, this year, I depreciated another 10,000 euro off that. And then the new vehicle, I depreciated that by 5,900. So if you add those together, that's going to give you 45,900. And that's going to go in your balance sheet as accumulated depreciation on the vehicles. Okay, so this 4,000 doesn't go in because it's on a vehicle that you have disposed of. So it is not accumulated depreciation on the 31st of December 2013. This 24 grand here, accumulated depreciation on the one that you disposed of. Again, that asset is gone at the end of the year, so you're not going to include that 24 grand in your accumulated depreciation. So it's 45,900 is what should sit on your balance sheet on the 31st of December. Okay, the last thing just to cover off here, that's us done, but just to say here, yeah, so in my receipts and payments account, there is a new vehicle, 50,000 euro. You're not going to do anything with that as part of this question. That is just telling you there was an outflow of cash for 50 grand for the new vehicle. That's the new vehicle, which has a cost price of 59 grand, but you got a trade-in allowance of 9 grand when you sold your old vehicle, when you traded in your own vehicle. So the 59 grand it should have cost, take away your allowance of 9,000, is the 50 grand. So that's just recording that 50 grand being spent by you during the year on the new vehicle. But you're not interested in the actual flow of cash. You're interested in what the vehicle cost, which is 59 grand, and that's what we work with. Okay, so that's all the vehicle adjustments done for the 2014 higher level service firm account. Your question.